Hello, everybody. This is the gold forecast for July the 13th to the 17th. So that's week commencing July 13th to the 17th. Okay, so let's begin. So, first, let's review what I discussed last week. So, I am currently looking at gold futures. So, I'm using the futures chart. And I'm currently on the weekly chart, but let's go to the daily chart real quick. So what I said last week, and just by the way, if this is the very first video you are seeing, don't worry, I'm going to explain everything because what I'm going to say will make absolutely no sense. Bear in mind that this is, I believe, a video number, I think, 9 or 10 in this series. So there are other videos, but you don't have to watch those videos to make sense of what's going on. So don't worry, I'll explain everything. So first, let me apologize for any background noise. It's really hot, so you might have the fan and in your face, basically. Okay, so last week I said that. So bear in mind, I'm still bearish. Why am I bearish? So I use the daily chart to decide my overall bias. As long as price is below this moving average in red, my bias is bearish. That means if price goes above that moving average and stays there, then my bias will shift. So fundamentally, everything is driven by bias. I don't have to be correct. I could be wrong, but fundamentally, everything is driven by bias. What I said last week was that because I'm still bearish, my expectation was that we would revisit the 4,000 level. So let me put on a lipstick. Okay, so these lines are just the auction levels. And I believe we were right here last week. So today's Saturday. Um, Market closed yesterday. So all of this action is basically last week. What I said was we were already at this auction level. That meant that my mindset went from location, which is where the trade will happen, to when the trade will happen. That means I said to you guys, all I'm looking for is an entry, which I got there, and my targets were basically the same targets we discussed. So first, obviously, potentially revisiting these old levels, auction levels, which is around the 4,000 or say 3,930-ish. This is the futures chart, by the way. And then if I squeeze the chart, you can see that these two blue lines are the next two auction levels. So one is at 3,008, say 50, 70, 850, and then the next one is at 750. So that's obviously where I'm trying to target, which is the next auction level. Why is that? So price is simply moving from one auction level to the next auction level. Okay, auction levels are non-directional. They have no directional bias. This is why I said that was where I was targeting. Now, I could be wrong. I could be wrong. Bear in mind, I said that my 2026 target, so this is just based on overall price movement from the high that we set in Jan to this low right here. If you project that out using a fib a projection, so the 161, that target is 3,500. I know it's crazy. I know it's crazy. But that's ultimately right here where I want price to go for 2026. That level is also an auction level, so it overlaps. Don't worry, I'll explain what auction levels are. This is my overall 2026 target and why I am still bearish. Of course, we're below the moving average. All of this can change suddenly. Why? Why is that? The professionals, so Goldman Sachs, Merrill Lynch, Bank of America, these guys, they have their targets for 2026 at 5,000 to 6,000. So obviously there is a clear misalignment with mine, which I've got to say I'm worried about. So I wouldn't be surprised if price suddenly reversed, went above the moving average, and then gave an opportunity to go long to 5,000. So the strategy for me is really simple when it comes to auction levels. I use auction levels to enter and then exit price levels. And the reason is because auction levels are basically like PD arrays. Okay, so they are like PD arrays, not they are PD arrays. What that means is that just based on observation, price moves from one auction level to the next auction level. It can go up or it can go down. That means if I am bearish, what I expect price to do is move up into an auction level. So here's an example. So by the way, I've drawn these levels on, but I have an indicator that actually does this for me. I'll show it to you. One second. Now this is internal, and this is it's not available publicly. So you see these gray lines. These are all auction levels. So all I've done is just drawn them on to show the next one. I'm going to take them off now because it's a bit messy. Okay. Um, so all these are all auction levels, all these levels. As you can see, price is simply moving from one auction level here to the next to the next. That's all it's doing. So we were already here. That's why I said that's basically an entry for me. Um, Price is below the moving average. Now, let me bring everything together. So going into next week, my viewpoint is the same. I'm still bearish unless we close above that moving average and we stay above that moving average. So just a simple close isn't enough, okay? Because price can just immediately reverse. What I need to see is a very obvious close above it and then stay there, move back down into an auction level to target the auction levels above. So if you are bullish for whatever reason, the next obvious auction level is right here in this red line, 4,520-ish. Okay, so as traders, fundamentally, there are two main problems or things we are trying to resolve. Okay, let's ignore the fact that, or let's just assume we always have a bias. Okay, we always have a bias. It doesn't have to be right or wrong. It's just we have a bias. So that's a prerequisite. Now, the two things we need to solve, the first is where is a trade going to happen? So think of this as your location. Where is the trade going to happen? The next thing we have to solve is when will this trade happen? So think of when as your models or your timing or activation, all right? Now, these videos that I create, the forecast videos, are designed to answer the first part of that question, which is where is the trade likely to happen? So I'm only focused on locations. Yes, sometimes I may talk about the when, but primarily the video is on forecasting. It's about location. So how do I do that? I simply use auction levels. Now, auction levels are invisible lines on your chart, horizontal lines. Now, what I would do in the olden days is I would just draw a line on the chart, a naked chart, and that line represents where I have multiple touches, so multiple interactions of price. That line will act as support and resistance for me. So I'll draw this across the entire chart, different time frames. I mainly use the daily, but that's basically what I would do. And like I said, what I decided was build an internal, so not publicly available, indicator that would automatically do this for me so it's more consistent. Now, the indicator does a little bit more than that, has a slightly different recipe, but that's the basic idea. Okay, all it is just drawing a line based on multiple touch points. Okay, and what this line represents, the reason why I call them auction levels, is think of these lines either like support or resistance or equilibrium. That means there's buyers on one side and there's sellers on one side. And obviously, someone's going to win that battle. So this is why I use these auction levels, okay, these auction levels as a location to either enter the trade or if I'm already in a trade, exit the trade. Okay, I don't do it in between, just at those auction levels. So going back to what I said last week, we were already at this auction level, and you see we rejected off that. I took an entry. So if you are, so I have a VSA background. Um, if you're a VSA person, if you drop down to the lower time frames, you can see a clear mushroom. So you have a hidden selling, you have supply, and then you have no demand. But don't worry about that. Okay, so that's a slightly different video. For now, you understand hopefully what these auction levels are. Again, another way to think about them is like a PD array. Okay, just think of them like a PD array. Price goes from one PD array to the next. In my case, it's going from one auction level to the next. The only difference here is it has no directional bias. That means you need a bias. Before you look at this, you need a bias. You can be right, you can be wrong, but it protects you from just following price. Okay, so right now, conditions are price is below the moving average. That fundamentally means I will remain bearish, regardless of what price does. If price moves above this red line, which is the moving average, then and only then will I change my bias. So my bias goes from potentially bearish to neutral to weak bullish and then bullish if that happens. But I am not bullish. Okay, I am not bullish. I have a short in at the minute, a current at break even. It hasn't been taken out yet. If it does get taken out next week, that's fine. I don't have a problem with that. But I am not um, bullish. Now, I do understand if you look at the weekly, we are hesitating. We are hesitating, lots of wicks. This could suggest a potential reversal. I am not convinced. Again, I could be wrong. And the reason I'm saying I'm not convinced is if you zoom out, 2 weeks ago, remember I said that if we assume I'm correct, okay, just give me 1 second. If we assume I'm correct, that would mean that this high to this low, 3,500, is your dealing range. We are currently in the last 25% of that dealing range. This is why I said my expectation, so just my expectation was price will move quickly with momentum. We haven't done that. We haven't done that. This is why I'm a bit worried. We may potentially do a more aggressive reversal. I don't know, but I don't know. I was expecting momentum. We just haven't got that. Instead, we've spent 3 weeks revisiting that 4,000 level, back and forth, back and forth. We have three indecision type bars, lots of wicks at the bottom. But as you can see, we're just bouncing from one auction level to the next. That's all we are doing. Now, these auction levels are incredibly powerful because once they are active, they stay active, I think, forever. If you look at GEPI yen, so pound yen, price is currently at an auction level that was set 10 years ago. It's refusing to break it. Uh, 10 years ago. So just through observation, I'm telling you that these auction levels are very powerful and price is just going from one level to the next. So that's pretty much it for the forecast because nothing's really changed from last week. We still have those levels below us, which is where I want price to go. So the first one is 3,850-ish. That's the one just below that 4,000 level. That would be the next kind of TP. But ultimately, my 2026 target is 3,500. So what that means is every time price goes up, I simply view that as a retracement because of my bias. If I didn't have a bias, I wouldn't know what's going on. Now, you could be sitting on the opposite side of that fence, and you could have a bullish bias. That would mean every time price goes down, you view that as a retracement. So it's not about when. So we're not talking about activations or when the trades will happen. We're just talking about the overall forecast. So going into next week. So of course, these immediate auction levels will be where we expect price to go to if it wants to go higher. And these ones, so there's two levels here. So I treat each one level as separate levels. I always assume the next level will hold, and only if it doesn't hold, then of course price will target the next one. So in sort of summary, I guess with auction levels, only three things can happen, just three at auction levels. Technically four, but the fourth one is just the status quo. So obviously, price can just ignore the level and go to the next one. So remember, it's just going to the next auction level. I don't treat that as one of my three because if it just goes through and doesn't stop, then it means that auction level is it's not holding. Basically, it's just going to run through. It doesn't even break. So the three is price can reverse. So you can go reverse like we have here. You can see very clearly taps into it, reverses. Where is it going to? Another auction level. That's all it's doing. Um, so that's one thing you can do. So remember, you have a bias, so you're anticipating these things. The second thing it can do is it can continue in the direction that it started. So if it's going up, it can continue, but it will break, right? It will stop. So here's an example. When it goes into this auction level, it gets a break here and then continues. Okay, that's not it running through. If it runs through, it doesn't stop at all. So here's an example where it ran through, didn't stop at all, but it went into this auction level here and then reversed. Okay, so that's what I mean. So it can continue. And the third and final thing is it can plateau. So plateauing means it can churn, it can consolidate, or it can have one of these seek and destroy or retracement type um, price movements, right? Where it's not very clear what it's doing. So reversal and retracements are not the same thing. A reversal is very obvious move away from that level. Very obvious. It's like bang, move away. That's what I mean by reversal. A retracement is more. It's still in contact with the level, but it's minor. Okay. So there's only three things. That means with a bias, you always anticipate a reversal with a bias. Okay, so especially if I'm uh, bearish, what I want to see is price go up. I'm only shorting when price goes up. I don't short when price is going down. I only short when price goes when it goes up into into that auction level. I am anticipating a reversal. So I drop down the time frames. My mindset. So remember, your mindset starts with location. So I do it separately. And only when it's at the location, like last week, no, 2 weeks ago, I said we were already at the location. So last week, because today is Saturday, I said I was just going to look for an entry. That's it. My mindset shifts to when the trade will take place. This is where I activate my actual model, and everyone has different models. ICT, supply and demand, VSA, um, whatever that model is. So I anticipate a reversal. That doesn't mean I'm correct. It just means that's the framework that I'm using. So hopefully I was able to cover a lot in this video. You don't need to watch the other videos. And hopefully you got some insights. That's it for next week. See you in the next forecast. Thank you very much for watching. I'll see you in the next video.